Hello and welcome to a Learn to Trade webinar, and today we'll be showing you how to purchase ETFs on eToro, the global investment platform. We are in our virtual account at eToro and we have £100,000 of equity, a little bit more because we've done some trading, and we have one ETF bought already, which is the ProShares Ultra Short SP500 ETF, which is a short position on the S&P 500, which means when the market falls, we benefit. And it is a ×2 product, inverse ×2. So the market goes down 1%, we benefit to the tune of ×2, i.e. 2%. Now, we are going to purchase a crude oil ETF. To do so, we'll go to Trade Markets, and then ETFs from the Instruments and Asset Classes menu. And we see a list view. I think by default you'll probably see a card view, but you click on this icon on the right to change the view. We'll go with the list view because it's much easier to scroll through. And there are 255 exchange traded funds on eToro. There are actually literally thousands of ETFs, and they have collectively assets under management to the tune of around $7 trillion at the last count, last figure I saw. So we're going to buy a crude oil ETF. In particular, we're going to buy the Invesco DB Oil Fund, which goes by the ticker DBO. So we could get to it with that ticker by simply entering DBO in the search box at the top, and that would get us to the market. Or we can scroll down the list, and as D is quite early on in the alphabet, there's not much scrolling to do or flicking through the pages, which there are 5 to show the 255 funds. So here it is, DBO. You can see the sentiment bar over on the extreme right, and everybody's buying ETFs, not many sellers at all. So many bulls are still raging in the marketplace as we speak. Click on the icon for DBO and it brings us to the Invesco DB Oil Fund page, where we have some basic information about the instrument. Most important bit being that it tracks the DBIQ Optimum Yield Crude Oil Index, and it trades on the New York Stock Exchange, and it uses derivatives in order to track the price of crude, and it uses futures contracts in particular, and because of that, it incurs some extra expenses regarding rollovers. So when it gets to the end of a contract, in order to maintain an exposed position, it has to roll over the contract, and that incurs some cost, which can contribute to tracking error. All ETFs have to some extent have some tracking error. That's to say, they won't exactly match the price of the underlying asset that they are trying to replicate the price of. That's something to bear in mind with ETFs that rely on futures contracts, as this one does. And also something specific to the oil market is the contango phenomena, where the futures price can get out of kilter with the spot price, can be higher than the spot price. So that's something else to be aware of. And it'll probably be remiss of me not to mention the fact that last year something historic happened in the crude oil markets, because crude oil price went negative for the first time ever in history. As the lockdowns hit, it led to a massive reduction in demand for crude oil, and that meant demand for storage went up hugely. And so dealers in oil ended up in a position where they were paying storage people to take oil off their hands, and the price went negative. But things have changed since then, as we can see in this chart. The oil price since last year has been steadily rising, and that is why we're going to buy some oil. To do so, click on the blue trade button, and it brings up the ticket for the deal. You are buying the underlying asset. That's good of eToro to show that we are, because some of the ETFs on the platform are CFD products, CFDs that are used to wrap the ETF, if you like. Because we're buying this, we are definitely getting the underlying asset. That's to say, we are directly buying the exchange traded fund. But if we were to sell, then we would be using a CFD instrument, which is a derivative, in order to take a short position on this particular instrument. And you'd be offered the opportunity here to set the stop loss. And because it's a CFD, there'll be an overnight fee, because it's basically an interest charge. And you can also use a trailing stop loss, which means that the stop loss, if the market's going in your favor, moves up with your winning position. Okay, we won't be selling, we're going to buy. We're going to buy 5,000. So our exposure is 5,000. There's no leverage involved, which represents 5% of our equity, and that equates to 457 units. I wonder what units are. It is another way of expressing what we've done here. So it's the amount that we're investing divided by the price of the asset we're buying. And we have two options. We can either do a order, which would be called a limit order on many platforms, or we can take the market order, it's called trade here on eToro. So this would be a limit order, so we can set the price that we want to pay at. Obviously we don't want to buy at a higher price, so you would take the option to buy at a lower price, let's say 90 as opposed to 10.92, go for 10.90 or even lower if you think that's what's going to happen to the price. But on this occasion we'll take the market price, and we're going to buy 5,000, and it is commission free, which is very good to know. So let's open the trade. The trade has been opened. Go to our portfolio. Might not necessarily see it straight away, although we do. Here we are. So sometimes it can wait in the pending orders to be executed, but on this occasion that hasn't happened, and it's gone pretty much straight through. So there we are. We have just bought $5,000 worth of the DBO ETF, which is the Invesco DB Oil Fund. So that is how to purchase ETFs on eToro. And if you wanted to buy or increase your winning position here, you think the market's going to fall further, you could add to your position on the short on the S&P 500 by opening a new trade and adding to that one. Let's say could add another 5,000, let's say. We're going to take it at the market price. There we are, buy SDS position opened. And now you see it's changed from 5,000 to 10,000. So, thank you very much for watching today's webinar from Learn to Trade. Please click on the link in the description, which will take you through to eToro, where you can open an account and trade for 0% commission on ETFs and shares and a number of other instruments. Thanks for watching, and see you at the next Learn to Trade webinar.